Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. Well, it was quite a week once again. The tariffs can't stop this market. The Dow finished just about flat for the week. Year to date, still up 4.2%. But the real news this week was the S&P 500 hitting an all-time high once again. So the market was up almost 1%. Year to date, we're up over 7 now. NASDAQ, pretty strong week, up 1.5, sitting in at 8.2%. International index off a little bit, still year to date up over 16%. 10-year Treasury holding right in at 443, and oil was down this week about 3.5%. So what keeps driving the market? Well, stocks are moving higher gradually because of a few things we'll talk about. But listen to this. Since April 8th, which was the bottom of the market this year, the S&P is up 26%. What are they being held up by? Well, believe it or not, there's still economic positive data coming out. The CPI, that's the Consumer Price Index. This measures inflation. It was 2.7% year over year, so below 3, which is good. A little higher than expected, but we saw prices in clothes. I just bought a new appliance. Appliances are higher from Friedman's. Those guys are great. They delivered it right on time, stuck it in the wall like at my party today. It's wonderful. The ice is working again. Anyway, those are more expensive. So is furniture. I mean, I'm not telling you don't know. These are all, how much is that? But prices are lower in cars. So used and new cars, prices are lower. The real support came from this is why the market liked it this week. The PPI, this is the Producer Price Index. So according to what it costs to make stuff, that came in at 2.3%. This was well below forecast. So inflation as it pertains to making things appears to be under control. What else happened this past week? Well, we started the second quarter of earnings. Companies started reporting, and they're beating expectations. Last week, we had 12% of the companies report, and of those, 86% exceeded forecast. That's above the 10-year average. Typically, 75% is what we see. So we're seeing strong earnings coming out. These were the likes of JP Morgan, Goldman Sachs. Tariffs continued to remain as the overhang on the market. According to the Yale Budget Lab, the U.S. collected, get this, $26 billion in new revenue in June. That's the highest rates in tariffs we've seen in revenue since 1910. So right now, investors are wait and see. They want to see what's going to happen to the cost of things. Will these numbers start to change? Will they get higher? That's really all we can look at as an indicator of what's happening. But as long as they stay under control or at expectations or exceed expectations, expect the market to continue to move higher. That doesn't mean that we're out of the woods. And typically you have September, October coming. Those are the months that are usually entertaining. And so I think this year could revisit that again.
You can hear the Protect Your Assets Market Briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets Market Briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.